I go like this? I'm posing.
There you go. Good morning, everyone. How are we? How's our energy level? Have we had coffee? Yes. Have we had carbohydrates? Yes. Did we get some sleep last night? Yes. All right. It's not bad. We're going to have Heidi up on stage, and then we're going to engage with our lovely panel. Let them know if you're your favorite person. Heidi, give us a big round of applause for our organizer. Good morning.
The stage is yours.
Good morning, everyone. We had a great day yesterday. We counted around 275 one-on-one meetings that were conducted yesterday. And today, hopefully, we'll continue with those one-on-one meetings. We had over 235 attendees, which is great also. We've been told, because of the market conditions, that the interest in the subject has waned a little bit. But I can tell you from personal experience that the blockchain community is so resilient. This is not the first time that we do an event when things are tough. We've done the Global Blockchain Congress when Bitcoin was at 67,000. We've done it when it was at 3,000. And the result is almost always the same. We're always amazed and astonished by the resilience of the community, by the positiveness of the community, and by the strong belief that this is not gonna go away. This technology is here to stay. This new ecosystem is here to stay and to grow. So I want to thank everybody for being here with us today. We're looking forward to an amazing day filled of interesting content and great speakers, and to continue the one-on-one meeting tradition that the Global Blockchain Congress is so famous for. So thank you all for being with us today as well. And I would like to welcome back Gordon, who has been doing a great job emceeing this event. Thank you, Gordon.
And up, we have a panel. What is the future of digital assets, regulated or non-regulated? That's a topic close to my heart as a lawyer on this topic. Moderated by my favorite person, other than Hadi, Oliver Von Wolf, co-founder and CEO, Helion Ventures. If you would please give a big round of applause. Good morning. And just program note, feel free to applaud anytime anyone comes onto the stage. You know, there you go, good energy. All yours.
Thank you so much. Thank you very much, Gordon, for the short introduction. Thank you very much, ladies and gentlemen, for joining this panel this morning. I see it got a bit more people. Thank you for waking up earlier and coming today. So, Gordon, yeah, we would maybe need a lawyer on the stage as well. So if you want, you can join this panel. I want to introduce the speakers shortly, that we can start with the panel and with the content of it. So first one who I would like to introduce is Hans TRIයෙන් N, Executive Advisor from Apollo Capital. Please, Hans, come up. The next one is Kevin, Fund Manager from Whale One. Then we have Simon from Albata Group. He's their Chief Digital Officer. Welcome. Last but not least, Carlin, co-founder and managing partner from Nexo. Again, good morning. So let's start our panel, and we have a very interesting topic this morning. What is the future of digital assets, regulated or non-regulated? So my first intention when I was thinking about regulated and unregulated, then the question was, what is at all regulated at the moment in the digital world? So here maybe I would make my first question to you. So how much do we really need regulations? What do you think?
Good morning, everyone. Thanks for inviting us to this event. And yes, this is obviously a very important question that we need to ask ourselves as a community, and then hopefully make the right decisions going forward. Nexo has always said two things, since the very first day that we have come into existence. Number one, there has to be full transparency, and this industry to survive and thrive needs to be fully institutionalized. So there are many people that have, I have met over the years, and they have always, or many of them have felt, that this is going to be something new, something unique. It's going to be fully deregulated. It's going to be like some little, pirate island in the middle of the ocean. And at the same time, Bitcoin is going to go to 1 million. And I have to tell you, it's not going to happen, until we make this industry look and feel more like traditional capital markets, where you have established practices for hundreds of years, transparency, financial statements, and basically showing your work as proof, and not only, talking at conferences about how great, work we're doing. It's, it will never grow into what all of us here, without doubt, wanted to see it grow to. The second thing, regulated by all means. You cannot, be in the same, let's say market niche. For example, Nexo, we're the largest retail-oriented crypto-backed lender in the world. We have always been for full transparency. We have always been for, having our colleagues in the field provide financial statements, provide proof of reserves like we're doing, on our page. Those of you that know us know that you can go on our website right now in real time on any day and just look at our real-time assets versus liabilities verification. And we're the only company. So, the problem is that if you don't have this regulated, if you don't have a level playing field for everybody, you're essentially giving competitive disadvantage to those that are the good actors in the field, and those that are not regulated, they just do their business according to their own perception of how things need to be done.
So when I take this now, Simon, you have a lot to do with like also regulation, not regulation, at least a bit more, even you're not a lawyer, just to mention this here. So what do you think should be prioritized in regulations?
From a corporate perspective, in terms of my background, Chief Digital Officer of the Albata Group, we are constantly exploring use cases where we collaborate with startups who build up virtual assets because we see there are clear transition in the market. But from our perspective, what is of course important is upfront due diligence. That's an important part. It's such a new field for a lot of, especially industries. It's basically a black box, and their regulation, in my opinion, should be beyond just, let's say, compliant perspectives, because here the technology is a core element of it. So reviewing the white papers, analyzing the roadmap, if it's credentialed, the ability to deliver, the consensus mechanisms, all these elements bring a new facet, especially in this field. So upfront due diligence is a very important aspect. Continuous transparency and monitoring is also an important part, but also then having insurance of a license which has a stability over the time, because an investment is obviously multiple years, and you need to know that there is a stability of this startup in future from a regulatory perspective.
Thank you very much. So this brings me to the question for you, Kevin, as a fund manager. How do you do this in your daily job? How you can, if you say, no, I want to invest somewhere in GCC or in Dubai, and there's no regulation, or there is a part of regulation, do you just, as a fund manager, invest out of your feelings what you have, or is there any kind of mechanism already?
Well, first, the crypto market was kind of the Far West when it began, like he said. There was no regulation. It was the survival of the fittest. And even if there are regulation right now, it stays the same. So when you look into a project, like you said, as a fund manager, you want to you don't think about GCC, where it's based, and things like this. You think about you want the project first not to be shady, having some kind of rules, and you are helped by the regulations, of course. For example, you don't need to you don't need to have these written rules, because there are ways around it anytime. So regulation are needed, sure, because this is where you're going to have a defense for the retail. Us, when we invest in project, we want to have this kind of protection, but you can see this protection with other things than just the regulators and the policymakers.
Okay, Hans, you from a higher level as an executive advisory member, how do you see it? What should be regulated and what would be over-regulated from your point of view? Just on a higher level, let's say. So we had here now a bit more operative, execution part from a fund manager side. And now if we skip the middle management, go to the higher level, so a bird perspective. So how do you see what would be over-regulated, or what do you recommend to your team?
Okay, well, very interesting question. Thanks for that, and good morning, everyone. Yes, so echoing my co-panelists as well, regulation is a key component of the industry. Without regulation, this industry is, might eventually die, or it won't get the adoption that we all like to see eventually. I think what is the most important thing is regulation so far has very much followed events, and started with crises, starting with AML KYC a few years ago, then moving on, following basically bad actors, following bad examples, and then the regulation stepping in. Usually that means and we see the same stance at the moment, it's panicky. Okay, so what you need is basically you need to make that trade-off between quality and quantity regulation. So you need smart regulation in this space. And having dealt with regulators, so our funds are basically Australia regulated, and we have a regulatory partnership in Singapore, for example. And having spoken to regulators also in this region, in Gibraltar in the past, there are very smart regulators in the place, and they know what they want. They want to, at the same time as they want to protect their consumers in their jurisdictions, they want to build a professional ecosystem on blockchain and crypto. And I think at the moment we haven't seen much of a global effort. The European Union, we see they are, you see the MiCA, the markets in crypto assets, which is going to be implemented over the next 2 years. It's very much a consensus of so many member states that come eventually to a certain ruling, but that's not necessarily going to work. And if you're going to make it more stringent than fiat currency in the way that fiat is, and that currently banks, even in AML and KYC, are kind of regulated, it's going to be a big challenge.
So more or less you get guided by the regulations, what you had so fast in the past, somehow. I mean, it's a kind of comparison. Okay, there's no regulation in place, but there's a regulation for this. Do you try to compare this sometimes?
I think it's pretty hard, because in essence, decentralization is key of blockchain industry. And decentralization is not something you can regulate that easily. How are you going to regulate code? It's computer code. So it's pretty hard to do. And I think we see that now as well. There's lots of confusion. Look at just at the United States, where there's basically a turf war between all the different regulators on who is going to regulate what. And we have the US Treasury saying, well, on the OFAC list, we're going to put these developers of Tornado Cash. We're going to accuse him of facilitating anti-money laundering. That doesn't give a very good, a very promising indication.
You brought a nice topic up, Kalin, about challenges in the digitalization for the future. So what do you think are the biggest challenges in the digital transformation in which we are at the moment?
Well, now, many of us in our projects, in our companies, we're trying to find a solution to a problem, right? And obviously, blockchain is just a facility. It's a way of, let's say, sending money across the world in a fully transparent and instant way. Bitcoin obviously is considered a store of value, due to the, finite supply of the asset. But then, this is just the fundament. And the question always is, what do we do with this fundament? And, we touched on a few very important subjects, that need to be streamlined in the future to have mass adoption. For example, DeFi, this was, a good example. DeFi, we like DeFi. Obviously there is a lot of innovation coming from DeFi, but DeFi is not a ready product yet. For one very specific person, reason it was just mentioned, you cannot have institutional adoption, in a space, in a network, where there are no controls. You cannot provide financial services in this day and age if you don't have KYC and AML. I'm sorry to say this, but it's true. It's, institutions will never touch DeFi, and, many of our institutional clients come to us and say, if we only suspect that our money that we're sending to your platform is somehow tainted with other money that doesn't have, proof of, an origin of funds, we can't do it. It will never pass our compliance, So, this is, again, that this is, back to the question about regulations and what needs to be regulated. And what I absolutely love here in the UAE, we're having very, very productive conversations with VARA, with ADGM. The regulators here are asking the right questions. They're saying, we want to regulate, we want to bring the best practices from established regulations in capital markets, in the financial sector, but there's perhaps a twist. Help us find, this, this best role that we have here. We don't want to stifle innovation. At the same time, you have to provide transparency to those making investment decisions, to those users, that are entrusting your assets, on your platform. So I think, that there is a minimum degree that absolutely needs to be there. And it needs to protect everybody at the same level, whether you're a large institutional investor or you're a small retail user. And again, I think the fine element there, that the regulators that will pick up on and indoctrinate in their work how not to kill innovation, how not to kill, this startups initiatives. I think this will be key.
Yeah, I mean, we see this in many countries in Europe. If we look to Estonia or Lithuania, they just had this topic and it went to the parliament, and thanks God there were some really blockchain crypto enthusiasts who stopped the worst case, that these countries which are so far very crypto friendly got very crypto unfriendly. So here in Dubai, Simon, how do you see what's coming from government, municipal side? How do you see how they're trying to get involved in this topic of metaverse and this kind of things? And also here maybe the second question, fields of regulation. In your opinion, what they should start to regulate? Is it more the field of crypto, metaverse, DeFi, what we had all at once, or how you would prioritize this?
So first of all, I think here in UAE is really lies an opportunity to position the region as the leading place for crypto, because I think here it's always very efficient in decision making, and here also you see with the initiatives like VARA, I agree with my with the previous feedback that they are asking the right questions. We had multiple discussions with them in terms of how to regulate it, and also avoiding one size fits all. Central exchange to decentralized exchange, there are two different things. On the other side, stable coins are different things. So there are so many subcategories. You cannot follow a one size fits all is all virtual assets. So in the discussions I see they are differentiating them and trying to understand the nature of each segment, and avoiding to say, okay, now it is all crypto things, so we have one regulation or even copy from previous frameworks and replicate it to the new, and then we are done. So they are avoiding this and trying really to understand, doing a lot of discussions. They have an MVP program where they collaborate with different startups, also to better understand okay, what is now the difference of broker or an exchange? What are certain concerns we need to make sure to cover that? So I think this is all the right direction. And also, at the end, it helps each startup to get better accepted in this field. Yeah, if it's not regulated, it doesn't get mass adoption. Corporates, industries, they will all ask, is this actually regulated? Is this a stable investment or not? And as long the answer is still unclear, they will not do this stuff. So even for the startups, in the beginning, there is maybe more bureaucracy to follow, but at the midterm, they will also benefit from it.
I mean, we had already heard now from one side the KYC, AML topic, and how to regulate this. On the other side, a bit about situation, how it seems to be. So, Kevin, from your side, if you onboard companies, for example, to which kind of process you go, and do you already think about how Vara could be regulated, for example, if you do investments, and how you measure this?
Well, I really think that this regulation problem is more an institutional problem because, like my previous peer said, they are reticent to enter the market where there is no regulation. Why? Because they are tied to regulation themselves. So the thing is, when you are thinking about regulation and you want to have a code regulation, a trustless process. Trustless is code where you don't rely on trust, you don't rely on relation, you rely on the code. So this is an important part. Of course, the regulation must come with the mistakes that are made, like look at FTT, look at FTX, look at Alameda, look at what happened with 3 Arrow Capitals. Every time there is a mistake, it cannot be perfect, but like this is where I think the regulators should have their say. So more transparency, proof of funds, and things like this. When we onboard company as a fund, what we want to do is knowing that the project is going to bring something to the table of crypto space and of our investment, of course. So Web3 per se is not necessarily very good for institutions because with no regulation you're reticent, of course. You don't want to put your money where it can disappear and you have no guarantee. So you prefer to have something in between, like a code that is trustless, so you trust the code, even if something happened, like it's all in the blockchain. This is why it's very important to audit smart contracts when you invest in stuff like this.
I have sometimes the feeling in all of this, let's say, our space about what we're talking about, you always say, okay, regulation folks innovation, but here I have sometimes the feeling that when the regulators coming to the innovation is already somewhere else. So from this side, Hans, to you, how do you, or where do you see the advantages in Dubai compare maybe to other free zones in UAE or to other restrictions in GC?
Well, I think Dubai is in an excellent position, both I think from a market timing perspective globally, as well as a time zone perspective. The VARA in particular, taking immediately an approach, while there is no official regulation in place to start issuing provisional licenses, but most importantly, taking the whole ecosystem at large into consideration. So they're really very accessible. So they're talking to projects and to parties who are interested for licensing from all over the world. They're learning very fast. They're learning also from mistakes that have been made in the past by jurisdictions that started earlier with distributed ledger technology, like Switzerland, like Singapore. And in fact, actually, Singapore is providing a huge opportunity because Singapore has the luxury problem that there's far too many companies to their liking, to the MAS liking, that are applying for licenses that they basically will not be able to do so because you can't, in a small jurisdiction like Singapore, you can't just have hundreds of different licenses. So it's actually providing an opportunity for other jurisdictions. I think also another point is in the from a wealth management perspective, and from the Middle East and Dubai in particular, transforming more and more into a wealth management hub, as Switzerland did in the past, as Singapore has done in the past. You're right in the middle. You're there. You're accommodating. Also, let's say from a work permit. I think work permits is a very important, very important topic. Allowing and facilitating the industry to basically come and thrive. I think that's a key element.
Well, when I wrote the VARA regulation, at least what is published on the market, what I was very significant was that they're trying to protect the investor, bringing trust back to the market, and I think that's very important, especially if we see just what's happened around the world in the blockchain crypto space. So, Colin, from an institutional point of view, how you would see the lack of governance around the digital assets, and also how you trying to prohibit problems in setting internal standards or something?
Yeah, absolutely. 2022, and I would say even second half of 2021, we're seeing whether there is institutional pressure or not. We're obviously seeing, much greater interest coming from regulators and having conversations with companies to understand, for the most part, how viable their business models are. This is one part of the conversation that we enjoy, for sure. And I think that every regulator should ask this question, because, for example, in the case, with, let's say FTX, but also there are, a number of, other infamous cases like Celsius, BlockFi, companies, that, obviously couldn't raise enough money from investors, to sustain an unsustainable business model, and they, ultimately had to tap into, user reserves, which is, obviously a very bizarre situation. Here comes the question about self-regulation, by all means, and there is, in Switzerland, for example, in the crypto valley, there is, there's a possibility, of joining a self-regulatory organization, but standards need to be uniform for everybody, because, otherwise, one company, again, I don't want to sound biased here, but I will give Nexo as an example. We have been self-regulating ourselves since day one. Our goal has always been to become, the first universal true digital bank. And since day one, we have operated as if we are a bank. We have been, following, let's say, statistical, data analysis, Basel standards, something related to, no concentration or over concentration of loan exposures to individuals or to, groups of related entities. I don't believe that any of this at all, has happened at other companies. One of the, obviously, points that we saw over the last couple of days is that, this latest, very, very large darling company in the market, didn't even have an accountant. Commanding 30+ billion valuation. I mean, how does this work? So again, what we're saying is that self-regulation, can work, to a certain degree. I believe, that there are a lot of good actors out there that, want to follow the best practices on established markets, but at the same time, there needs to be a rule book. There needs to be a book, that everybody follows, so that again, everybody operates on a level playing field.
Thank you so much. Simon, you as in a family office perspective, how you try to protect the investment risks of the market? Maybe very short because we're running a bit out of time. So,
I mean, in general, this is a new field, and it's I'm sure in other corporates it's similar situation. You first of all rely on how much clarity you will get in this field before tapping into it, and I think here it's more than self-regulation. I think even it's more required principle-based regulation where you have at least certain level in which everyone has to follow, and then you would say, okay, based on this, you have some stability in terms of your investments. And before that, it makes very difficult to make the transition from a traditional industry to this new field, which is in itself very technology-driven, and for a lot of decision makers, I mean, I'm aware of this technology, a very fan of it, but still, I'm the exception. Yeah, in this traditional industry, the tech is already blurred, and then you can have the compliancy, which is also unclear, and then you have the volatility. So it brings so many uncertainty around it that you would really would need to make a case to justify the invest. So that's why having their clarity in terms of principle-based regulatory, where you have consumer protection, market integrity, these elements you follow, this would definitely help to make the case.
Thank you. Kevin, one topic are banks. So how do you see the correlation between, let's say, a bit the regulation part to how the digital transformation works with the banks at the moment? How do you see this? What is your opinion about it?
I think the banks are going to play a major role. They will be able to be what Binance did for the last years, which is being the bridge between the cryptos and the fiat. So of course they need regulation. A lot of banks are now interested. Before they didn't want even to touch crypto. For them it was a pure scam. Now they see opportunities in this. So I really think banks are going to play a major role in the future if regulated properly. When I say regulated, I want to say like to give them some space, because banks are not over-regulated, but very regulated. So when they want to touch crypto, they are a bit scared of the consequences, so they stay away. This is my experience with banks. So, yeah.
Thank you so much. Hans, how do you would wish the ecosystem in Dubai will develop in the next years? And short words, maybe only 3 or 4 points. Topics like just headlines, what you would like to see.
I think I'd like to see collaboration between the industry and the regulator. I think that will help a lot to get the right understanding and move things forward. You know, big shout out in that respect to all the developers who are still, you know, developing and not discouraged by all that is happening and all the regulatory unclarity that does exist, because it's still haunting projects from years ago. So let's hope that, you know, let's assume at least that's going to be over soon, and we're going to be moving forward. And as I said before, Dubai is in an excellent role. It's probably going to be a bit more of a global approach and hopefully a more concerted approach to get the proper regulations in place.
Thank you so much. So we're running out of time, 8 seconds. I think we finish here the round. Thank you very much for joining. I hope there was some interesting topics and also content for the audience here from the speakers. I'm sure you will be still here around, so they can ask, people from the audience can still ask. Thank you very much, the audience, and let's have a nice day here today. Thank you, Hadi, as well.
Thank you. Well done. Thanks. Let's do a group photo, please. Very interesting panel. Next up, we have a follow-up panel, centralized or decentralized. What is the future of exchanges? That's obviously fantastically relevant right now. I'd like to welcome up onto the stage our moderator, Kokila Alag, founder of Karm Legal Consultants, and big round of applause. You will introduce the other panelists. Or themselves. Other panelists, please join up on the stage. And just we got it, it's Colleen Metrodeep, I'm sorry, Pranav Sharma, Nicole Purin, Valerie Hawley, and Alexander Belov. Big round of applause. And
Morning, everyone. It's quite interesting to have a panel on decentralized and centralized right after a discussion on whether we should be regulated or not regulated. So I think you'll have a lot of interesting takeaway, hopefully, from both these sessions, and that's our whole idea. I will now ask my panelists here to just briefly introduce yourselves.
Thank you very much, Kila. It's great to be on stage with you again. My name is Nicole Purin. I am the Deputy General Counsel at OKX for Middle East. And my background is in traditional finance. I've worked at a number of financial institutions for many years in London, New York, and Dubai. And I joined the digital asset space about 6 months back. It's been a very exciting time, especially in the last couple of weeks. So I'm delighted to be here to share my thoughts, my personal views on the evolution of the industry, specifically in the context of centralization and decentralization. Thank you.
So I am a founding partner of Woodstock Fund, and we have been the oldest and the largest Web3 fund that emerged out of India. And we have a fund in the US now. We operate in the East-West corridor. And just to be very precinct and to be very related with the topic at hand, my background is financial services, good 15 years, private equity, asset management, structured finance, etc. So in many ways, risk management has been the core. I still remember that within the fund itself, I faced a lot of pressure that why are we focusing on these things? But we are in a good space and completely insulated from whatever happened. I call it, FA3, as in, this is like, in many ways, what really happened is FTX, 3AC, Celsius, etc. did not touch anything. Thank you.
Hi all, big pleasure to be here. Thanks for invitation. My name is Alexander. I don't have institutional background. I started in crypto 5 years ago from Bitcoin mining industry. And since that time, I also started my investments into crypto. And now we have a fund investing in crypto. We are actually backed by media. So we have a group of companies. We do media. It's crypto media. And as well, we run our portfolio. And right now we have a project. It's a documentary film about history of Bitcoin. And we have CZ, Justin Sun, Charles Hoskinson, and many Web3 protocols like 1inch, like Polygon-Matic, all together in one documentary film. And the name of the film is Stay Decentralized, Whatever Happens. And I'm telling it, anticipating the discussion about sex and DEX. So, yes, thank you.
That's really interesting. Let's start with, crypto exchanges started pretty much as the entry point for anybody who would want to get into the crypto space. If he's not a techie or not in the ecosystem, trading and with the volatility of cryptos as such, exchanges got their popularity and are at a position where they are. With that, now we have the centralized exchanges and decentralized exchanges. Some are favorite of regulators, some aren't many. And both have their pros and cons. So maybe we start with a little bit on what is your take as a GC for an exchange in the MENA region?
Sure, absolutely. Now, the first point that I'd like to highlight is that the world has changed. The world has changed significantly in the last couple of weeks. And we're going to see, in my personal view, a very steady and rapid evolution, which requires adaptability. What we'll be seeing now is perhaps more hybrid structures, because clearly regulation is here to stay. It's going to become more and more, let's say, prevalent. We've already seen a lot of these initiatives, taking place globally. Even here in UAE, the regulators are actually now, really becoming more and more, let's say, prevalent, and they will, I guess, have more and more demanding requirements of exchanges. But I think that the flexibility is key. Technology, innovation, being able to provide to customers the ability to also maintain control of their assets. And the exchange that I work for, does have this technological capability. Although there will still be an element of centralization that is required specifically for financial institutions, for the purposes of trading, for the purposes of settlement. So it's a question of re-established trust, of ensuring transparency. There are a lot of initiatives in the market, in terms of self-published proof of reserves, appointment of third-party auditors to process that, and we're seeing more and more of that. But we are, in my view, moving towards a more hybrid model. But certainly regulation is there, and it'll become more and more prevalent throughout.
What's really amazing about these panels is that regulations and transparency are figuring out as a word count so frequently, and it's so amazing that this is catching the, you can say, top of the head kind of a mind space. And if you look back, this is reactive, and this is something that was also highlighted by the previous panel here. And what's amazing is that if let's say people had a very simple perspective that when you're touching somebody else's capital, there's a certain fiduciary responsibility. Okay, I'm using the words that lawyers use, right? And when that fiduciary responsibility becomes important and just understanding the dimensions of those responsibilities, then you land up doing things which are the right things to be done, prudent things to be done. So in many ways, I think this is the crisis of prudence. Regulations is much more concretized at a very different level. And till we have self-regulations, I think this is also another phrase that came in the previous panel, and we have enough intent to be prudent about how we operate in this space, I think we'll keep on going in different cycles. And in many ways, regulations or no regulations, without prudence, we have seen this even in capital markets, it leads to chaos. Enron happened in a very, Lehman also happened in a very, you can say, well-structured, the largest market, which is out there, stock market, etc. So my sense has been that this is a three-layered process. First is self-regulations, which is prudence, risk management frameworks, etc. The second level is, can there be industry body? Let's say by the good actors coming together and defining a hygiene that becomes the basis of, ensuring that, there is enough, you can say, checks and balances within the industry itself. And then the third level is that, if there is industry level insight, which comes from, let's say, auditors, whether these are big fours or they're new auditors, or they are impaneled by the respective regulators, etc. And if all of these three, you can say, gates are not, put together prudently, then definitely the regulators have to step in. And in that context, whether it is centralized exchanges or decentralized exchanges, both of them are touching, I would say, capital of, investors in some ways and trusting them. The trust would be broken. So when this argument comes, whether it is a centralized exchange or a decentralized exchange, my personal view is that, of course, convenience, faster, cheaper, better, definitely counts. But eventually, what really stands is that do you have prudent practices? Do you have enough oversight? And are you the right kind of, you can say, participant in terms of handling people's, capital? And if that checks the boxes, then definitely the regulators will be light and easy on you.
Yeah, being crypto nomad, I would say that we are here in the crypto space for decentralization, and it is a real dream of us. And I use crypto because of that, because of these advantages. And even though decentralization is not yet achieved and we still have centralized exchanges which are regulated, I feel like we should avoid using a centralized exchange as much as possible, especially considering what happened with FTX, and there are issues with other exchange. I'm not going to give names, but maybe after we can discuss it. Yeah, but you know what happened with 1inch, for instance? It's, as you know, it's a good decentralized exchange aggregator, and they were delisted from App Store just because they don't have a license. So it is an issue for decentralized exchanges which are good, and yeah, we can trust them, we can trust their code, but it is an issue. They have to be regulated somehow. But I think it is an issue which they can solve, and finally we can reach maybe in next 10 years we can reach these situations when we have just decentralized exchange, because with centralized exchange we will always have this kind of Ponzi scheme inside, and they can easily crash like we have seen, unfortunately.
You know, interestingly, when people talk about, Pranav, going to your point on 3 layers that you talked about, I always find it very interesting as a lawyer to understand who will define a good actor. A month back, or say 2 months back, before FTX, we had Sam as a good actor. We had FTX as the name that we would like to go by. Now, all of a sudden, we're talking about its crash. So when it comes to those industry body leaders, I think it's a very interesting space for us to self-governance, again, self-governance, prudence, all goes hand in hand. But it's a very interesting topic for us to see that we as the industry pioneers, what are we doing in this space? And it was interesting to hear the panel before this talking about the whole trustless and trusting the code. Are we all deviating from that? Are we somewhere guilty that we are looking at who makes it to the race, who's gonna win, not seeing that who is doing it correctly? And I find that very interesting when people have these discussions on, is it the centralized or decentralized? What is the market demanding for it? What do you think, like when people ask you that, what is the future of crypto exchanges? Is it decentralized? Is it centralized? I still find that it's too primitive for us to talk about. And what do you think is the tilting point? Is it the market? Is it the investor protection or the customer protection or the fiduciary duties that we talked about that a regulator will demand? What do you think is the tilting point for us to see? Because if that's the need of the hour that people want to know, is it decentralized exchange or centralized? What do you see, like as an investor in this space, as part of an exchange? A hybrid model is interesting, but hybrid, how will that be licensed and regulated is another discussion.
Yeah, no, absolutely. I mean, you're right. I mean, if we move towards new types of models and development of new technology to accommodate also users' controls of their funds, yes, this will bear very interesting questions. We're still not there yet, because all of these, developments have been very recent. Now clearly it is we're going through an introspection phase to kind of accommodate also what the market was. The market will ultimately dictate the users, because we are here to serve the users ultimately, and they will dictate the transition. But I think from when you're dealing with financial institutions, for example, and that's your focus of clientele, I mean, regulation is key in order also for them to have the required, let's say, internal checks, ticked. And there's also a lot of discussions about segregation of funds, appointment, the development of custodians, decentralized custodians, centralized custodians. I mean, it's just very interesting, because there's just so many different facets now that are, and solutions that that can, evolve. So ultimately, my take is that the market will dictate. We are already seeing, new developments. We are, presenting new solutions. For clients, we are hearing their thoughts, their views. We are in discussions with regulators. For example, one of the points that, in light also of the recent crisis that we're discussing is whether should an exchange, perform proprietary trading function. And I'm completely against that, because we've seen what's happened, with the FTX models. It's just that this industry is still so young, like there's no, if you look at the conventional financial system and, you've got, prime brokers, you've got market makers that are also supported by governmental entities. So the kind of support that you have there, we just don't have in our industry, because it's just so, it's still in such an embryonic phase. But I think we're moving in the right direction. I think even in this crisis, there are a lot of opportunities that we can learn from. And I think the industry will become stronger. I think that, the more resilient players and technologically solid players will survive. And we need to also, we need to listen. We need to listen. We need to, as I mentioned earlier, it's a question of rebuilding the trust, transparency, ensuring the client's assets are segregated to the extent that, this is the instruction of clients, and, to build a safer and stronger industry in the long term. Thank you.
One of the things, Pranav, that we would like to understand, you being in the VC space, in the fund space, and now we see, and then people are generally saying that Web3 is no longer owned, how we say, by the consumers or by the technology, but it's owned by the VC, and it's completely centralized. Do you think that's true?
Kokila, I think there is definitely merit in terms of putting this argument. I'm just taking a very balanced view here. Decentralization, centralization. Maybe I'm in the center, so I'm balanced here. My personal perspective here is that, let's say, if you raise billions of dollars to, let's say, invest into decentralized technology, inevitably you're becoming a centralized player and creating centralization. And I'll push the argument forward. And the argument is very simple, that eventually there'll be only as many lending protocols, as many marketplaces, and capital is a very important determinant of hiring the best talent and eventually seeing that you scale. And in any category, and this is not about only crypto space or digital asset space, this is about any category that you see, there are typically top 3 winners in any category. And the first winner takes it all, has the top line, has the bottom line. The second winner has top line, has medium bottom line. The third winner actually usually is on the verge of bleeding, practically has reasonably good, top line. And this is true for decentralization, centralization both. What it means is that, let's say if you're sitting on your billion, and let's say if you are allocating, let's say 10, 20 million to somebody, and they get the best of the talent, and they have the best of the technology, they build something, eventually they are going to by the business practices that they have, unintentionally kill the other market participants. This is a reality. So what is happening is that, a lot of capital came into this space, the capital came into the top, and this is by no means a pot shot, but I'm just saying that if somebody lost, let's say 190 million or 290 million in an FTX, I was like, you should have given that money to us, we would have made it 2x, 3x, whatnots, right? But the limited point I'm making here is that, you land up becoming an allocator, and you land up, flowing the money on the top, to certain individuals and investments, and these are the only things which are available to you to allocate, because LPs are pushing, for you to allocate. So that is why the industry got a lot more lopsided towards, VC landing up, being you can say the industry structure builders in many ways. But what's happening with this unwinding is actually fantastic, because this is almost like instant decentralization. That means that the founders have a voice. That means retails can participate. That means those VCs have been very prudent and creating win-win-win situations. They have a seat on the table. They can also effectively participate. And hopefully with all of this new industry structure that we are stepping into, we'll end up taking the industry forward.
Correct.
Yeah, speaking about user acquisition in this dichotomy between centralized and decentralized exchange, I would tell about my personal experience. I remember 2017 when the biggest decentralized exchange was Ethereum Delta. Have you ever tried to use this exchange? It was a horrible experience. It was absolutely impossible to use it, and it took hours to understand what is happening and how it's possible to exchange one token on another inside this Ethereum DEX. So yeah, the main goal for DEXs right now, in my opinion, is the usability. And I would say that, the decentralized exchange are doing great in terms of usability now. Of course, such an exchange like Binance or others, they have much more friendly user experience still. but we see the progress of decentralized exchange, and it is what really people were looking for, because their experience was really difficult. And now many newcomers to crypto industry, they can understand how to swap their coins on decentralized exchange, and that's already good. So this, I see this trend on the usability of decentralized exchange, and it's really good for industry, and in future I think this problem will be solved even better, and we'll see higher I would say, like, you know, many beginners start from centralized exchange, but in the future maybe they will, considering the decentralization and the core idea of crypto, they would start with DEXs first.
No, absolutely. So user interface, onboarding, brings us to the question of AML KYC. Now, this is what the regulators and as a good business practice also one should put in place. How do these exchanges, and especially Nicole, going back to your idea of a hybrid model, how do we tackle that when we're talking about anonymity on a blockchain, and especially in a DEX space, and now we're talking about a KYC to the very T of knowing who your grandparents are, how does that work?
I think KYC and AML are not going anywhere. Actually, they're going to become more and more necessary, I think. So that's a fact. And, you know, the industry users will just have to, let's say, adapt to these requirements. But it's just the way that, you know, the direction, you know, of the sector.
Add here, so when, let's say, people look at, you know, so there are three things. One is KYC AML checks, second is AML, and third is transaction monitoring. In my opinion, transaction monitoring will become a norm whether you centralize or decentralized. Because transaction monitoring brings about a lot more transparency. It also ensures that the kind of suspicious wallets that you may be interacting with knowingly or unknowingly, eventually, let's say, if some decisions have to be taken to align you with the consumer or the long-term interest, etc., all those decisions can be taken. So when you say transaction monitoring, very simple. It's like, let's say if you have a wallet, essentially that wallet interacts with which wallet. And there are enough, you know, firms which are out there. Chain Analysis does this, Ellipti, you know, does it. Even CoinFirm does it extremely well. We used to use CoinFirm. They used to generate a 25-page report for every wallet that we used to have, for all the LPs we used to have, and we used to keep it on file, share with our 3 ML officers, you know, on board, and eventually have 3 KYC ML agencies on check. I'm not saying that, you know, anybody does, you know, go through so much of pain, but we were very, very finicky about, you know, when the regulations and FATF guidelines were not very firmly laid out over the past 3 years. So first is transaction monitoring, a must. Second thing is KYC ML checks. In my opinion, I'm here and there, because they could be light KYC ML checks, as in you can identify a wallet, you can identify an IP, you can also identify broadly the area in which, you know, they are. But identifying the individual and creating a centralized database, of course, you know, can become a privacy issue. And, you know, the other concerns are that, okay, fine, let's say if you're a US citizen, what is my, you can say, liability if I hold up, you know, I hold that data, you know, with me. There is a GDPR violation that can happen. There's a privacy law violation that can happen. So many more complicated, you know, things that will happen. But I think minimum level of hygiene, so that if, let's say, a regulator steps in, then there is a way to identify that participant and find a way to triangulate and engage with that participant. That level of KYC, let's call it light KYC, will come by. AML, once again, as a space, if you look at it, I mean, you know, so one of the argument in this space is that because, you know, there has been no KYC ML checks, the money, you know, kept on, you know, flowing from one point to another. This is a systemic risk for many countries, which are especially smaller. This is also a concern. So that's one reason that regulators step in. Second reason that, you know, regulators also want to step in, that they really want to know that are you interacting with a wrong participant who may create some other risk, which could be security risk, physical security risk, etc. And in that sense, you know, the regulators will become a lot more prudent. They will become a lot more participative. And, you know, in that sense, you know, a lot of this landscape on this side will accelerate and a lot of things will change. So I'm hoping that, you know, with breaking this into 3 parts, you know, this makes it significantly clear that, you know, where we are heading.
Yeah, I'm being a digital nomad. I'm not good enough in this part of the question. Speaking about KYC, I usually try to avoid it as soon as it is possible, and I feel like there are more experienced people in this question in this at this conference. For instance, Gordon Einstein, who is a legal advisor. So I think if we need to discuss KYC and anti-money laundering, we should ask him.
No, it's a very interesting take in.
Sure, it's a pleasure. Yeah.
I mean, there are clearly different points of view depending on the sector, that you're in. Clearly, if you are in the, if you are a crypto asset manager, or if you're a crypto exchange, or you are a digital nomad, as you defined yourself. But ultimately, when you are a regulated exchange and you want to be regulated in order to, to ensure that you can build also the institutional clientele, and to support the development of a highly substantial crypto financial system, there will be some requirements, there will be some rigidity, and it will be aligned to the conventional financial system, to the traditional financial system. I'm seeing more and more that we are moving in that direction, and of course there will be some players in the crypto and digital asset sector that will not like that. But still, this is the reality that we're seeing now, that there is more and more stringent requirements coming through. I think industry leaders in these sectors are recognizing this. They're publicly making statements in relation to this. So, we have to live with it. But at the same time, I think the technology, the innovation can bring more effective solutions. Even, for example, in the context of proof of funds, you have the traditional way of verification, but we understand that also third-party auditors are they have their own faults. They don't always they don't always really find the right solutions, and there's been criticism in relation to that as well. So the technology can maybe support that in a more effective way that will also be accepted by regulators.
Absolutely. I think one of the things that should be a takeaway from this panel is a lot of questions that each one of you should take it back. Proof of funds, proof of reserve, or a regulator's approval saying we're satisfied with what the third-party auditor said, or we trust the technology and we go with it. And as we started this panel with saying that we think it's still primitive to discuss which way or a hybrid way. Let the market decide. Let the regulators who are getting into this space, by understanding that when we're doing a transaction monitoring for an MTF or a crypto exchange, to what limit can we do, and how much of their dependability is there on the technology itself. So I think there's a lot more that we will have to wait and watch in this space, but there's never a dull moment in this segment. With this, we end this panel, and if any questions, please reach out.
Thank you very much.
Next time. I'd like to. One more round of applause. Good job, Alex. Thanks for the shout out, moderation. Okay, so that was our panels for this morning. Now we have a series of excellent presentations. First up, we have digital assets powered by blockchain technology. Our speaker is Victoria Kolosov, Chief Operating Officer, Crypto Performance Group. Big round of applause, please. Good morning. How are you? Please.
Good morning, everyone. My name is Victoria Kolasov, and I'm the Chief Operating Officer of Crypto Performance Group. So my topic today is digital assets powered by blockchain technology. And the focus of this is our new innovative product called CP Bank Asset, which I will get into more detail later. And prior to our deep dive, I just want to showcase CP Group. So here you can see the different brands under the division of CP Group. And to fully understand the company, I think it's vital to showcase our 5 flagship products. It is important to note that CP Group is entering its 4th year of existence and successful long-term success. The first business you see is Crypto Performance Platform. This was the birth of CP Group. So the initial idea behind this was to connect people who are new to the crypto world, enthusiasts that want to find out more, as well as professionals, conglomerates, businesses. And they could purchase the top 20 crypto coins there and hold them. So that was the idea. After which followed the CPC coin. CPC coin is the native coin of Crypto Performance Group. It can be purchased on the CP platform as well as listed on global exchanges worldwide. Next is the Crypto Performance Chain. This is the chain of crypto performance developed internally to the business. And the CPC is the native coin. And our newest project is Crypto Performance Bank. It launched in May and has since successfully provided crypto cards and IBANs to individuals worldwide. And last but not least, a philanthropy project, CP Charity for Charities. This is a great belief that we want to see where the funds go to track them via blockchain, as well as provide different companies that are already in the philanthropy area to use white label solutions to help those in need. So here's a little snapshot of the group. Here I would just like to take a short overview of the milestones CP Group has already achieved. So throughout the nearly 4 years now, so we're entering our 4th year now successfully, these are the different aims, the different projects we have launched, the different, both in the crypto world and the bank world, innovation, technology, these are the things that have been achieved. And we have won multiple global awards as well for different projects, whether it's CP Charities or the blockchain itself. I will go into that a little bit deeper throughout the presentation. So together, all these businesses create innovation not only for us as a CP Group, but for individuals and corporations that are looking to use white label solutions to achieve those things that they have set out to in the crypto world, blockchain world, to innovate in technology and have a way to fund. And it's worth saying that all our products launch without an ICO. They're fully funded privately and they're fully developed internally. So prior than diving into the CP Bank asset, it's important to understand the different projects that make up the group in a little bit more specifics. So as mentioned before, the CPC coin is the native coin of Crypto Performance Group. It was launched without an ICO. It has a limited number of 250 million. And it's listed on different exchanges as well as available on the CP platform. Here you can have a little overview of what it is. Crypto Performance Chain is the own blockchain of Crypto Performance Group. And we're happy to announce that we won Blockchain Solution of the Year 2022 in IABC Dubai. The blockchain is one of the front runners in technological solutions, taking blockchain scalability to the next level in terms of that 1 block equals 5,000 transactions in under 15 seconds. We have some of the lowest fees on the market, ranging from 0.005 to 0.06%, as well as strong security. And last but not least, the CP Bank. So the CP Bank, it has its own crypto Visa card, allowing to swap, exchange, withdraw crypto fiat instantaneously. It can be downloaded on Google Play. Soon we're launching on iOS systems. And it has IBANs internationally for anyone who would want. And now to our digital asset. So the CP Bank asset provides a unique chance for investors to participate in fees, global fees generated by CP Bank products. The CP Bank products are CP Bank crypto card and multi-fiat currency wallets. Basically, what it allows is investors to gain premiums from the global fees of these two products. It is a unique chance to buy in until the 30th of June 2023, after which it will be available on smart wallets located on the CP blockchain, as well as available for trade and P2P exchange. And what this project aims to do is to give back 50% of the fees into the ecosystem, research and development, marketing, growing the community, growing the strong ecosystem, and the other 50% is distributed amongst asset holders. We initially prognosed that within the first 2 years, the premiums will be allocated yearly, after which quarterly or monthly. The following slide provides an example of what it is. So here you can see the CP Bank asset is limited. So we go by first come, first serve basis. So the limit is 4.5 million assets, out of which 3.25 are available for investors to purchase currently. And we here took a very simple example. So we lowballed it with an average user. So an average user spends about $10 a month on fees, whether they're using the card, the multi-fiat wallet, the products of CP Bank. And we hope to achieve in year 3, our prognosis does understate this, that in 3 years' time, we will reach 1 million users on the CP Bank, and through that, replenish 96 million into the ecosystem. So in terms of the ecosystem, this will help spur the demand for the CPC coin, spur the demand for the existing projects of CP Group, and continue building the ecosystem, the innovation and technology that we so strongly believe in. The other 50% is allocated to the CP Bank asset holders. So here we predict that in year 3, the returns and the yield will be 113%. And it is important to note that the CP Bank asset is paid out in CPC coin. So that is once again going back to the idea that it is an ecosystem that lives off each other, benefits from each other, and that innovation grows. As mentioned previously, this is the distribution that you can see here. 50% is allocated to the CP Bank users directly onto the smart wallet of the blockchain, where it's very visible. You can P2P it, trade it, pretty much act with it as any way you want. And the other 50% stimulates the demand for CPC coins, stimulates the market, stimulates the CPC community that already exists, and globally continues to fund the innovation and technology. So here's just a short summary. Basically, it is a project developed on an own in-house built blockchain with competitive prices and limited supply. It provides a unique opportunity for investors to participate in the CP Bank asset, and it's a win-win situation not only for the asset holders, but for the ecosystem as a whole. The aim is to enhance the ecosystem, expand into new geographical locations, and grow the value of the CP Bank for its users and holders. Just a short back note, so CP Group was founded by Horst Stabler and Giuseppe Rimola. They are in the crowd. They are both very successful and have a great track record in crypto and blockchain and different marketing and strategic enterprises. And to end my presentation, just a short overview of the unique selling points of Crypto Performance Group. We believe in long-term strategy and long-term research and development into innovation, technology, into new products that help create a one-stop shop for individuals, businesses, corporations alike. And, of course, our blockchain and that. So today we invite you to join today in the digital future of tomorrow. If you have any questions to any of our products, if you would like more information on the CP Bank asset or the blockchain, please feel free to visit us at table 6. And thank you so much for your time.
Nicely done. Next up, we have another presentation, a metaverse for nature and wildlife protection. Interesting. Adrian Moisen, please come on up. Founder and CEO, Wild Meta Earth. Very interesting topic. Big round of applause, please.
So I'm the founder of Wild Immersion. We have a VR60 film from all around the world with more than 200 species. We have 100% satisfaction. You can see it at home with your iPad or your iPhone. We have a full nature encyclopedia with all the animals of the world. We have a lot of applications. You can draw animals and put them in the metaverse. We are doing treasure hunt with augmented reality. We have 60 different animals in 3D that you can put everywhere. We have a lot of digital quiz and unique experience. We have 15 VR theaters. And so the aim is to protect and connect people to nature. That's not the good slide. Okay. I'm gonna go back to the beginning of the presentation. I'm so okay. So the goal is to preserve nature with the power of blockchain and gaming. So we are creating a metaverse. We already have a company, and we created a new company which is called Wild Meta Earth. So Wild Meta Earth is the first metaverse for nature and preservation. It's a play, own, and protect model. You know that we are facing the biggest threat in history: climate change, pollution, biodiversity loss. But it's time to engage people with entertainment and gaming. It's time to be positive and take action now. Because we have the potential to create a metaverse to gather and protect nature by having fun. So NFTs, the power of blockchain, metaverse, gaming could be one of the solutions to the biggest threat in history: pollution, climate change, biodiversity loss is the biggest problem ever. We are just at the beginning of this problem. But there is a huge opportunity. Excuse me, but... So there is a big opportunity because like the gaming industry is growing every day. We are facing like a huge growth. Like it's going to be 321 billion in 2026. And now 50% of the use of the blockchain are gaming. You have play and earn model that can really engage people. And you have gaming coin, where you can use crypto and gaming at the same moment. So that's why we have created already, it's functional, a metaverse with 3 worlds and games, all about nature. You can buy NFT, you can trade them, you can have your own island, you can go in the metaverse in Quest, and you can play different games. But also there is a huge community space. We have 2 special tokens to engage people and allow them to make money by protecting Earth. We are really the future of protection by gamification. And gamification is really important because it engages people. But we want to go further. We want to go to the virtual, to the real. And that's why the metaverse is already created and linked with real reserves. So through your NFT, you will have a real impact in the world. You will be able to preserve wildlands. So with your NFT and your token inside the metaverse, you are linked with the real world, and you will be able to safeguard, reforest, preserve, and raise awareness about nature and share with your friends. So our partner is Wild Immersion. We have 300,000 spectators a year. We have 15 VR theaters all around the world with 200 species, more than 20 hours of content. Our godmother is Jane Goodall. She's worldwide known. She was the first to discover that chimpanzees use tools. They have characters, they have emotion. She's really known, especially in the USA and in UK, in China also. And we stand for three main goals. People first, because we want to engage gamers and nature lovers to preserve the planet by education and playing. That's really important. Also to have profit, because when you invest, you want to have return, and you can have it through NFT and through token. We have a huge tokenomic. And we have three different worlds that are totally interconnected. Wild Game, Wildland, and Terra Wild. And one is for entertainment, one is for gaming, and one is for preservation. The first one, for preservation, is Terra Wild. So you start in a desert, you plant your NFT, and each NFT represents real plants in the real world. And so you will have a CO2 trap, and you will see all the CO2 you are trapping inside the metaverse in the real world. Then you can go in Wildland, where you can gather in community and see all the content of Wild Immersion. So you will have films, documentaries, all the nature encyclopedia, and educational game. Then you will have brand and association to promote their ecological action. So we are already in contact with different brands to create their space. They will have showrooms, donation box, goodie store, but you will have also a lot of different activity, like movie theater, like forum, shop, university. You can learn by playing. And then you go inside the game. There is a housing and farming game, like Animal Crossing, and there is a fighting exploration game, like Zelda. And you go in the desert, and through terraformation, by planting your trees, you create your own island. Then you can customize your own island, you can generate token, you can rescue animals, you can play with other players inside your island and create community events. And then you go in adventure. You go through the world metaverse, you can discover secrets, you can fight, you can clean pollution, and you can go in different quests, solo or in group. Every week we will have different quests and a lot of different community events. You will have a lot of rewards, like badge, like land protector, plant protector, statue, the greatest player, the greatest protector, and token and NFT. So we have created 2 tokens for a balanced universe. Wild Meta, which is a governance token, speculative, and I'm here to launch the private sale. We already have 50% of the allocation. And Meta Wild, which is a payment token inside the game. It's a utility token with a stable coin. So Wild Meta is a speculative token. We are allocating 80% for the public and the private sale. And for the moment, we only do the private sale, and next month it's gonna be double. And then you have like the token in-game that is gonna be quite stable. It's really important to have full transparency because 50% of the NFT will go to preserve nature, to buy lands and to reforest. Also to make regenerative agriculture. So we are creating a DAO to allow people to vote and really engage. Vote for the lands that we're gonna protect or the development of the metaverse. We have made the metaverse on Unreal 4, like that a lot of other developers can propose games. So we are discussing with the boss of Unreal and Fortnite to allow a lot of people to engage and create new games. We will have 3 waves of NFT. In February, the land NFT that allow you to have your own island and a real link with the world. Then the plant NFT to grow your island and to create food and resources. And then animal NFT that will live in your island as a reserve, and after they can accompany you in your quest. So we are in November, we are beginning the private sale, and in 2 days we already have 50% allocated. Next month the private sale too, but it's gonna be like the double of the price. And after we make overview of the metaverse in January to prepare the NFT launch. NFT launch will be with the land. After we open the metaverse to all the landowners for the beta testing. We already have like 20,000 people wanting to be on the beta testing. And then the NFT launch in April. In June, you will have the third NFT launch with the animals and the token launch. So I'm the CEO of the company. I created Wild Immersion. I also launched 2 NFT games as a marketing director and art director. It was Cross the Ages and PayFoot. With Cross the Ages, we raised 12 million only with a presentation and a video. With PayFoot, 6 million with a presentation and a video. So I wanted to come with a full metaverse, not only a presentation and not to be a scam. I really know the industry, and I know that in the beer market, it's really important to have trust. So we already have the metaverse. And also, to be sure to have a good metaverse, we have 3 developers inside the company who are shareholders. My brother is a COO. He was 7 years at Warner Bros. Entertainment. So as a summary, we are play, earn, and protect metaverse. We have 3 different worlds, totally connected, one for education, one for preservation, and one for gaming. It's all about nature and wildlife, but it's also really entertaining. And we have 2 tokens to engage more the community and allow them to make money. Wild Immersion is our main partner, but we have also a lot of different partners and brands wanting to come. And now we can see images of the metaverse. And so, as I told you, it's already developed. You can already go inside and begin to play and discover the different area. So you can choose your character, and as I told you, you start in the desert. You bring back life by planting your NFT, and this creates your own island. You can build stuff, you can grow plants, and then you can rescue animals and create your own reserve. You can breed them, you can make babies, you can trade the babies, and after you go in the community, you can meet friends, have discussion, and then go shopping with different brands, ecological. There are a lot of different activities. You can go in the university, in a library, in amphitheater. We have more than 20 hours of content in the Nature Encyclopedia with full 360 films, a lot of different documentaries also. And then you can be teleported inside the nature in 360. You can play from your computer in 6 months from your mobile. It's not only with the VR set. And then you have the gaming part. You go on quest, you discover secrets, you rescue animals. We have more than 200 species. And then you find new items, weapons, to fight the pollution and the corrupted creature. So it's time to explore a whole new world and link it with the real world. Thank you, and I will be pitching at the one-on-one meeting.
Cool video. All right. Next up, we have simplifying blockchain games for Web 2.0 players. In other words, the older people like me. Faris Abutaleb, CEO and founder of Ghost Ivy. It's a big round of applause. I think I'm Web 1.0.
Works too, right?
Yeah, okay, very good. All right.
Oh, good morning, everyone. Hope you had a good night's sleep, because I didn't. I readied my gummy bears, my tea, everything, sat down, had it ready. Opened the laptop, everything, then boom, Call of Duty. I need an update, 1.5 gigabytes. So I couldn't play anything, and the team is sad and everything. So I sat down, I couldn't do this anymore, waited for 2 hours for the full update and then played, so I didn't sleep. But for sure, I ate the gummy bears, so that's one thing, right? But let me tell you why this is important. Without it then. So, why this is important? Because in Web 2, if you're playing a game, you need to boot it up extremely quickly. You're not waiting for anything. That's one. And two, the game needs to be fun. What's the problem now with current games in Web 3 is that you need MetaMask or Wax Wallet or whatever. You need 15, 20 minutes to actually do something. That's if you know Web 3. Now imagine you're someone which is Web 1, and then you need 1 month to actually understand what the hell is happening. Like, oh, do I now open an exchange account, buy some tokens, create this MetaMask or Wax Wallet or whatever wallet? That takes you so much time, in the end you just want to play a game, right? And imagine now you're playing Axie or any play-to-earn game. Now you come back from your job, doing 10 Excels a day, go home, and then do another Excel sheet, right? Like, let's see how much money I can make from this game. That's not the actual goal. The goal in Web 2 is to actually have fun, play something quickly with your friends, with everyone. And now, what we're doing is simplifying that. How? So with Ghost Ivy, we create a simple solution is that your email is your wallet. And by that, we just slap your wallet into your email once you log in to our games, and that's it, right? So let's say there's a security issue. Let's say you lost your email. Again, your wallet is not lost, it's in custody. So you just give us a new email, and your NFTs are still there, everything's still there, you can play the game however you want, whenever you want. That's very simple, right? The second part is we actually do fun games, and not just clicker games like most of the Web3 games currently. And the reason is, no one wants to buy an NFT if they're not enjoying it, right? So imagine World of Warcraft, I don't know, 10, 15 years ago. You grinded for 1,000 hours, you have this nice mount right now, and then boom, the developers say, okay, let's just make a couple thousand of that and sell it for everyone because it's gonna make us money. With Web3 or blockchain, we can't do that. So this is kind of the safety that we're looking for in whatever we're building, everything is that Web3 based. So how do we get those Web2 players? Make it simple for them, make it simple for the Web3 players, and just add them together, right? Simplification is the key if you follow anything, like even Apple or whatever you want. As long as it's simple, people are coming here. As long as it's fun, people are coming here. So what we're building over this blockchain solution is a game called Haven's Compass. It's a AAA game with ex-Ubisoft, ex-Activision employees that we have with us. And this game will be the first of its kind in the Middle East, so to say. We have Arabic voice acting in the game. We have Dubai, Neom, all those cities in the game, which makes it a little bit more fun. Haven's Compass is more like an actual game with blockchain elements in the background. If you have a game that's just blockchain based, and then, again, no one from Web 2 will come, or Web 1.0, right? You want something fun to play. So for Haven's Compass launching in 2 years, we're currently developing it on Unreal 5. It has Arabic again, first-person shooter in PlayStation, Xbox, and PCs. So third part of this presentation I want to talk about is why not play to earn, right? The play to earn model is a legal hustle and legal problem, especially for Sony and Xbox. So we've been talking with Sony for 6 months now about play to earn, if that even works. For them, it's a big no. Like, it's literally impossible to have it. For simple reasons. They have people under the age of 18 playing games. They have worldwide, I would say, markets. For example, in Switzerland, where we're from, it's literally illegal because it's a gambling problem now. There's tokens in it. And you don't want that to happen. Working. So what's happening here is we found a solution with PlayStation that, okay, it's not play to earn, it's NFTs based, that's okay. As long as they're taking their cut, the 30% cut. So again, what's happening with Web3, with this final problem is that Web3 takes the cut from the players and takes it for themselves, instead of PlayStation taking their cut, or PlayStation Store, Xbox Store, or whatever. So now you have exactly what Apple did, is if you buy something on Apple or the Apple Store, they get their cut, you get your cut, and that's it. So those are the three simple solutions that are needed, right? Fun game, for sure. Easy access to Web2 players, even Web3 players like me. I prefer something where I just sit down, open up, and play and enjoy it, right? third part is giving everyone their share, which is what usually blockchain games are not doing, is being on the store, being fully legal, and just enjoying the game. I know my presentation is pretty short. I want to take so much time because I think we're pretty late right now, but happy to talk to anyone that has questions or anything. But yeah, let's make fun games again on Web3 instead of just clicker games, and let's see what happens. Thanks a lot.
Thanks so much. Okay, next up we have Revolutionizing Crypto Gaming with Andrew Ringline, CEO of Rifters. Andrew, please. Big round of applause. Big round of applause. There you go.
How's it going, folks? All right, hopefully I can use this mic correctly. I think I'm going to skip the presentation. I'm going to go a little off script here. So, my name is Andrew Ringline. I've been in SaaS and game software for 14 years. For the last 7 years, I've been working in gamification and engagement in the gaming space. So I'm going to start with some really recent history, which is we launched a game 3 months ago called Winter War, and it cost us $10,000 to make. And in 1 week, with a zero marketing budget, it became 3 times more played than any game on Solana. Now, how did we do that? We did that by using engagement techniques. We did that by understanding the users that we were targeting. We just launched another game called Rifters. We launched it 5 weeks ago in the middle of the bear market, and we raised 5.5 times more money from retail investors. What's that? I'm not going to use the clicker. Yeah. I'm going to go off script here. So we raised $3 million from retail investors on Solana, which is 5.5 times more than any other NFT collection has done in the bear market. And we did it again because we understood our users. Now, what does this mean? Like, what are we doing that's different? What's different than other game companies? I'm going to go back in time a little bit. So at the beginning of the year, I was consulting with a number of the top game companies, companies like The Sandbox. And what I found was there were a lot of communities that really, really wanted to be in The Sandbox. They had an NFT drop. There's a woman I met named Artie. And Artie had $1 million that she had raised from a collection called Ethalians. And she took half of that money, and she said, I'm going to spend half of this money in The Sandbox to make a game that engages my community. I have 10,000 people, and I'm going to spend this money in The Sandbox. But The Sandbox wouldn't return her calls, and she didn't know why, and so she approached me because she knew I was consulting with them. And I went and I found the answer, is they were too busy working with, Snoop Dogg and Mattel and Warner Music and all these other big brands. They didn't really have time for someone who only had $500,000 and 10,000 users, right? She was not that important to them. Well, I went and I asked her, I said, hey, how many friends do you have like you? She said, well, here, let me put you on in communication with 4 others. And I went and did 4 more interviews, and I asked those same people the same thing. I found 30 projects right away that had between $100,000 and $500,000, that had between 5,000 users and 10,000 users who really wanted engagement games. And there was no game out there that was doing it. This caused me to examine the space of Web3 very carefully. And what I found was everybody was making games for Web2. And no one was making games for the shape of the community that was already here. No one's making games that go suit to Bored Apes, other than Bored Apes. No one's making games for the actual degens. Everyone's thinking, what's the future? It's like people are making cars for children that aren't born yet, but they're not actually catering to the users who are already here. And the users who are already here constitute already a $20 billion industry, but literally no one is making games to engage those users. People are thinking about a console user. People are thinking about, hey, Fortnite. People are thinking about, mobile games, right? Well, a degen NFT owner, someone who is in the crypto world, is shaped differently. That leverages their NFT. And rather than making a game for the future of Web2 and waiting for the world to catch up, or rather than making a game and trying to figure out how to market it, what you're doing is you're making a game for other people. It's like making a game for colleges and showing up and they have no sports programs, and you show up and go, hey, by the way, here's a football. Now you've got a game you can play, and let's create a league here with everyone playing together. You can get automatic adoption. And by using this philosophy, we have completely turned the game on its head. So we believe that the games that we are making, and the games that we have already even deployed that are live now, are going to completely revolutionize all of crypto gaming. I think if you look at, there's other game companies in here. You're probably listening to me thinking this guy's crackpot. But in 6 months, you're going to see the things that we're doing being copied by all the other game companies. The question is really, can we take over? Do we have enough traction already? We certainly have plenty of traction in the bear market. The bear market has not hurt us at all. We're not over here going like, oh no, our token's down in value, because we're based on user engagement. Bored apes still own Bored Apes, right? People who own DeGods still own DeGods. People who are engaging in Discord and on Twitter, they're still engaging on Discord and on Twitter. They still have the same identity. Our game works the same. Our games work the same. So I identified this early in the year, and we built our series of games in stealth, and then we tested the first one 3 months ago. We launched Rifters 5 weeks ago, and we went out and we asked 10 of the top projects on the first chain if they wanted to be involved. And all of them said emphatically yes. We're in the process of doing our second chain drop, which is on Ethereum. Once again, all the projects we ask, we show them the game that we have, we show them what we're doing, we say, this game is for you, it's for your community. Come and play in this game using your own NFT you already have. We have Bored Apes, Mutant Apes, Clone X, Azuki, I forget the list. It's 7 of the top 10 projects on Ethereum are all lined up to play. The game is already built to work on Polygon, and it'll be working on Binance not long after that. And we're going to bring this to everywhere there are communities. And what we're doing is we're building like bridges between all of the existing projects and all the existing communities. And by doing that, we're getting automatic market adoption. So the thing that we're doing is spreading very fast and very virally. And it's because we're paying attention to who the Web3 user is. Now, the market of gaming is massive. It's a bigger market than music and television and movies all put together. And I do believe that it is the utility that's really going to put crypto on the map. When I was a kid, there was a game called Magic the Gathering that came out. Some of you may have heard of this game. And this game incorporated an element of ownership into actually playing of the game, ownership and collection. And because of it, it spread and became incredibly popular and got copied hundreds of times. And it basically was the first semi-crypto ownership game to ever come out. By having a better model, it spread virally to the whole world in many different kinds of ways. Crypto gaming is nascent, it's very immature, it's very early, but it leverages that same kind of principle of ownership. And it will take over all of gaming. If anyone here is not already a conviction of this, I'd love to sit down and talk to you about it for an hour and describe all the various things in crypto gaming that will replace current gaming. It will come. But we don't have to wait for it to come because there are already the users. There are already enough people. There's already $20 billion to be made. I don't need to go secure that future of Web 2. I believe in the elements of ownership and virality that are already present. If I can leverage someone's ownership of something already, then I can bring them into what I'm doing. That ownership transforms the nature of the relationship. The ownership of their Bored Ape, the ownership of one of my NFTs, the ownership of some kind of element like an item in the game, all of these things change the nature of interaction. And when you're focused on making a game that is, I'm going to make the next Fortnite, I'm going to make this next metaverse that's super engaging, you're forgetting the elements that actually really are significant in the current crypto gaming market that actually really work. And that is ownership. How do you change the ownership? How do you change communities? How do you change engagement? And that's the core premise of what we have done with all of our games. And I know I've described them very, very little. It's actually more about philosophy. We actually have 4 different games that we have built. But the main game, Rifters, is a PvP and PvE role-playing game. Conventional story game where you use the NFT that you already own, you come and you play, you can acquire items, and you can compete together for $1 million prize pool with your people who are in your community. Well, we built this game from the ground up thinking about, okay, what are all the things that are going to make people talk to each other? What are all the things that will make one member of a community go and recruit a second member of the community? What is every single element in this game? We're not thinking actually what's the most fun game. That's actually not what we're thinking about. We're thinking about what makes people stick around and what makes it viral. Because we already have pockets of friends. An example of this is there's a game called Wordle that my wife plays and my mom play. And it is a word game where you do 1 word puzzle a day. And it has gotten massive adoption from lots of women especially because they sit down at like breakfast or lunch or brunch and they talk about Wordle for the day, right? It has a social element built into it. Now, is Wordle the best word game ever made? No, it's not, right? Wordle has a viral tactic built into how it's designed that helps drive adoption. And that's what we focus on, and that has had enormous results. So we have users, we have engagement, we have revenue, we have NFTs that are seeing lots of traction. All of these things are coming from the fact that we've started from the ground up, building engagement, understanding our Web3 users, and then connecting to all these various communities. And I hear an alarm, so I guess that, okay, all right. Do I have more time? 15 seconds, all right. Well, my name is Andrew Ringline. I'm very, very excited by what we're doing. You are hearing it for the first time here, Community First Games and Rifters, but I think you will probably hear it again because I believe we are going to disrupt the crypto gaming space.
Okay. Next up, Community 3, leading the world into Web3 through technology. Brandon Byrne, CEO of Opera Event. Brandon, a round of applause, please. Got a microphone for you?
Thank you.
And we have a clicker for you for a full service conference.
Hello, everybody. Yeah, so I'm Brandon Byrne. I'm the CEO for Opera Event. Just want to walk you through a couple of things that we have here. I think one of the things that's really interesting about Opera Event is that it's focused very much not just on trying to support people who are currently in Web3, but we're also trying to actually bring Web 2 people in. And it's super important, given the vision that we have for it, that people understand that this is essentially an inevitability, right? And the things that we're going to cover in this presentation very quickly, we're not going to spend a lot of time. Why Web3 is so important to Web 2 in particular, how to be successful in crossing over from Web 2 to Web 3, how we do it, and who we already do it for, right? So these are all real important topics for how we ultimately get there. So one of the things that I want to try to paint a picture of and help you guys to understand, when you're comparing the idea of having customers versus stakeholders, right? Company A has traditional customers, traditional revenue, they're Web 1, they're Web 2, right? They're not Web 3 yet. Their customers essentially are mercenaries, right? There's no loyalty, there's no real relationship. Their interests are not aligned, and there's no real access for that customer. And so what happens is people who have problems go and do the only thing they can do, which is they go to social media and they complain. They air their grievances about these types of things. For company B, it's a little bit different, right? When you have people who own NFTs or coins, they become stakeholders. They're part of what you are doing. And as a result, they're just not likely to go and flame you online. Instead, what they're likely to do is go to these communities that we've built and try to get their problem solved privately rather than do it publicly. A lot of these problems occur because of the fact that the consumers went online 10 or 15 years ago, but the companies never did. And so what you have is you have situations where people are frustrated, they can't get in touch with the vendors that they're working with, and then they just go and do the only thing they can do. This here is Chris Brownridge. He's a good friend of mine. He doesn't know I'm presenting him at this conference, so do me a favor and don't tell him. He's a father, a husband, and an entrepreneur. He's got 500 followers on Twitter and 4,200 on LinkedIn, and he is what most people do, right? He does this exact same thing. I went and looked at his Twitter. I found 10 or 12 different complaints towards various types of companies. I pulled a couple of them out here. One is for Virgin America, and the other one is for Best Buy. That just shows how frustrated he was. He couldn't get any recourse, right? There's a really interesting study here from 2020 called the National Consumer Rage Study, which I thought, I actually couldn't even believe that this thing existed, but it does. Number of customers complaining on social media in the last 3 years has tripled on social media. So people are constantly going there because they simply don't have a way to get their grievances aired and get their problems resolved. 48% of Americans rely on their friends online to base their understanding of what brands represent. And then finally, you have companies that they're on social media, they're trying to be reactive, but the reality of it is that it's just kind of the wrong way to go. And the answer is, how do you solve that? The foundation of it all ultimately has to do with building these types of communities. Web3 is the beginning of that, right? But as you build these communities, instead of being reactive, you can become proactive. Instead of changing the way the corporation deals with the problem, we change the way that the customer deals with the problem. Imagine for a moment that you own an NFT for Delta Airlines, right? You spent $15,000 on it. It gets you discounts on tickets and free drinks and upgrades, and then you have a problem with them. What are you going to do? Are you going to go on Twitter and air your dirty laundry to them, or are you going to recognize the fact that your NFT aligns you with them? And in doing so, you ultimately are in a position where you're going to be able to get access to a community where you can actually get your grievances addressed. This is what Opera Event does. We do the hard part of NFT, which is we actually build the community. There's a technology that exists, obviously blockchain, smart contracts, things like that. These are super important and they lay the foundation for what we build upon. The right strategy, working with Community, and then the right execution, which is the SaaS software that we've created. And it looks like this, but essentially what happens is it has two pieces to it. The first is the engagement part. Our software goes out to your community. It gets information. It helps you to understand who's important and who's not. It's a minnow, dolphin, whale type structure. You're going to know who owns your NFTs. You're going to know who's engaged in Discord every day. And when those people talk, when you have 90,000 people in Discord, you're actually able to hear them. That's a critical component when you're running a community. Who are the people that you should be listening to? Flickr doesn't like me very much. So the Quester mission system is how people engage, how our customers engage with their communities. They're going and they're doing these various steps, and they're authing their wallets, they're authing Discord, they're authing their Twitter. It's giving you the opportunity to build incredibly rich data profiles. This gives you detailed information in a management dashboard that allows you to finally be able to work in an environment that's a lot more professional. Instead of having, oh, we have a Discord with 130,000 people in it, but we have no idea what the sentiment is. How many of those people are active? How many of them are happy with your brand? How many of them are, own your NFT, right? Our technology allows for you to get to the bottom of that, and this is the reason why we think this becomes much more attractive to the Web2 companies, because this gives you the opportunity to build a community in a way that is scalable and allows you to take control of the brand on social media. These are the people that we do it for. So we're not an early stage startup. We have $170,000 in monthly recurring revenue. We have 25 employees. We've raised money a couple of times. And we're working with the largest brands in the space, as well as starting to move people from Web 2 to Web 3. Companies like Capcom, who make the Street Fighter brand, or whether it's the Sandbox, Magic Eden, YGG, Immutable. Our technology doesn't care what blockchain you're on. It doesn't care what your product is. It doesn't even care if the product is Web 3. The only thing it cares about is that you want to build a community so that you can stand in between that social media platform gap that has existed for Web 2 companies in the past. Please. We're going to have to spring for new batteries. Okay, one more slide and I'm going to let you guys go. We have over 600,000 monthly active users on our platform. That's more than OpenSea and Magic Eden put together. The reason why that is because we handle community, which is the hard part of Web3. We do those things for these big brands. And it's not just one community. Sometimes it's 5 communities, 6 communities. If you're a metaverse, you might have a community that's specifically for artists or specifically for people who make games. You might have a separate community for content creators or for people who are coming in and getting their very first crypto wallet for the first time. We want to be able to make sure that we create an environment that will allow for them to be successful and get into your metaverse or your game or your app or whatever your product is if it's their first time being there. I think that's it, so I don't have to wait for the battery. There you go. I'm Brandon Byrne, super excited to be meeting all of you, and thank you for your time.
So big round of applause to all of you. Being here, good energy. Heidi, maybe we can go over a program note and explain the next sequence?
Okay, so this concludes the last presentation for the morning session. We're going to break right now for a quick coffee break, followed by one-on-one meetings. The one-on-one meeting session will also be the last of the meeting sessions. So if you have any meeting scheduled, please make sure that you do those meetings. And after that, we break for lunch, the same place where we had lunch yesterday. In the afternoon, we're going to have one presentation and 3 panels. And then after that, we will have the Global Blockchain Congress Awards distributed at around 4 o'clock. So have a great coffee break, great session of meetings, and a great lunch altogether. Thank you.
All right. And just for clarity, when exactly does
It begins at 1 and ends at 2, so please make sure that you're back here at 2 so we can start on time. Thank you.
Otherwise, I will yell. Okay? Anyways, thank you, everyone.